Okay, guys, I'm going to teach you some very important things on the chart. Those of you who don't understand what we're doing already, I do basically price action. Okay, there are different methods for trading, and there is no right or wrong way to trade. Whatever you do that works for you. Okay, yeah, we're going to have just one class. Yes, because that means already complaining because of time. Yeah, and then my apologies. I didn't mean to have the class by 9:30. I don't know how it entered 9:30. It was supposed to be 9 o'clock. Okay, so yeah, I'm gonna go over all these things, okay, and then as we make progress, you will begin to see them. Some of these things are more evident as you start to trade, and then you see other people using them as you watch other people's charts, like the senior traders. You see how the lines are drawn. So what I'll be giving you are basically the rules for these things, okay, how they are used, how we use them. Okay, so that's what I'll be giving you, so that you understand the basic things. Okay, and a lot of people have different ways and different reasons for whatever they are doing, but I follow the price, okay, because price is king. And then I don't get myself distracted with indicators. Okay, the only indicator I use is the moving average, and sometimes I use the MACD, that's the MACD, because it shows the momentum of a trend. Okay, but I don't even need a MACD to know when there is a divergence. Momentum of a trend is if the market is going up, right? Uh, if the market keeps going up, is making higher highs, okay, making higher highs, making higher highs, making higher lows like this. Okay, there is an indicator called the MACD that can tell you when that trend is losing steam and is about to reverse. Okay, but I don't need to even use that indicator to tell that the thing is going to reverse. Okay, the reversal is uh the bulls are making money. Okay, the green bars are making money. Here they have a little bit of rest, and then they keep making money, Okay, now there's a time when they will stop. This thing will get exhausted, and then it will reverse. Okay, to start you start seeing falling tops like this. Okay, you start seeing falling tops. Now, some persons rely on the indicators to tell them when this is about to happen. Okay, that is this area here. Okay, but we know that as price action traders, we don't need to wait for the indicator to tell us that this thing is going sour. Okay, if you plot a line here, you see the way the price has been respecting the line here, here, and then all of a sudden it stops respecting it. So you know that something is wrong. Okay, so the market's about to reverse. Okay, so when I have this line on my chart, I don't need an indicator to tell me that this thing is about to reverse. Okay, and then indicators give a lot of false signals. Okay, so that's why we rely on price. If this thing is going to turn, the indicator might start telling you from here that this thing wants to turn. Okay, so it tells you from here that is going to turn. Meanwhile, this is the place where it actually turns. Okay, so this blue line is called a trend line. Okay, this is a trend. Remember what I taught you, that if you have rising tops, rising bottoms, or tops, rising tops and rising bottoms, you have an uptrend. So this is an example of an uptrend. Okay, so if I draw a line that connects all the bottoms, I have a trend line. Okay, so then if I draw another line, if I try to draw another line on the other side of this uptrend right here, okay, this second line is called a trend channel line. Okay, the one below is a trend line, the one above is a trend channel line. Okay, there's no cramming anything here. The one down here is called a trend line because you use it to check how steep the trend is. Okay, what I mean by steep is how tilted, how slanty the chart, the trend is. Okay, if the trend is very steep, you have a steep trend, something like this. You know that you should expect a very sharp reversal if it cracks. This trend line is like a glass floor. Okay, one crack is gone. Okay, Andrew, you're raising your hand. I should assume that you want to talk, so I am unmuting you.
Okay, please, I have a question.
Yes, go ahead.
When you say that we should always trade with the trend, let me say now, that's rising channel. Will you buy or will you sell? As mean it was already at the top of the channel, not the bottom.
No. If the market is at the top of the channel, like that's the upper
Get that your
line,
mouse is now, yes.
now you can't think of buying here. It's wrong. Okay, and then
Okay.
at the same time, I don't like to be with the lesser crowd. Okay, this is like I like to describe it as a bad gang chasing a good gang chasing a bad gang down the street. Okay, or two gangs chasing themselves down the street. The good gang pushes, or though there's no, is there anything like a good gang? There's no good gang. Okay, the first one gang will push, the stronger gang will push, and then the weaker gang will fight back. Then the stronger gang will push again, the weaker gang will fight back. You see they're pushing them down the street. Okay, so this is the weaker gang. I don't like to be with the weaker gang. I would rather wait for the pullback to be over, and then I will get in with a strong gang. Okay, you got to get good entry. If you're following the trend, a trend is more forgiving of a sloppy entry. Okay, if your entry is not good, as long as you are with a strong trend, you still can manage to squeeze out something from that particular market. Okay, but if you are with the weak gang, you make a loss, and then if you don't have a stop loss, you're going to be wiped out. So most of the time, I don't like to trade against the strong gang, except this channel is happening in the minor trend. What I mean by minor trend is the higher time frame. Let's say this uptrend I drew here is happening on a 5 minutes time frame. Meanwhile, the 1 hour time frame or the 4 hour time frame is a downtrend. Okay, I'll show you what I mean. Let's look at EU. I was on EU today. Let me show you EU. Okay. Let's see EU. Now this is what I mean. Now if you look at this chart, you will see that you observe that on the 1 hour time frame, there's a strong downtrend from here. Strong downtrend from here. You see this market surging downwards from here, even though it's not entirely a downtrend. This is an uptrend. If you look at the market coming from the other side, you see I'm talking about intraday now. This would be a downtrend. Okay, this would be a downtrend. And then let me go to a smaller time frame so that you can appreciate that downtrend. Okay, so you see the market coming down like this. Okay, and then you see that there's a channel here. There's a channel here. See the channel. Now this one is going up. This one is going up. Okay, we had one here. Had one here. In fact, we still have this one forming here. Now I'm showing you this channel because I sold an overshoot on this market. Okay, I sold an overshoot on this market before New York session. This is the overshoot I sold. Okay, because I saw the market bounce 1, 2, and 3. Okay, so you see, I bought at the upper channel line with a limit order. I sold rather here with a limit order because after the London section, London section was from here down. Okay, we closed out the position somewhere around here. Okay, and then I immediately closed out the position. I didn't buy. Okay, because I knew the big trend is a sell, and I was expecting the market to sell. Okay, the sellers were very, very reluctant. Okay, but now I knew the market will come to haunt these stops for the New York session. So immediately New York started. Surprisingly, the momentum was very low. The market was very sluggish, was going to the stops. So I had a limit order here, which was triggered. And then immediately triggered, you see the bars that were sending the market down. I observed that the market was not going down. So I started trailing the market. I was stopped out here, okay, with a little profit, very small profit. Okay, so I already had the ambush. It's very easy for you to see an overshoot in hindsight. Okay, that is, you can see overshoots very easily at the middle of a chart. Okay, but to see it at the right edge of a chart, it's not very easy. Okay, it requires a little bit of practice. And then there's something I call laying ambush. Okay, so I already had the line drawn immediately this market got to this point, and I knew that, okay, since the market was not going down fast, it means that it has plans to come back to take out the guys here. Yeah, you will see this overshoot very clearly on the 5 minutes time frame. That's what I was using. Okay, so yeah, this was London. I closed here, and then New York started and it didn't do very well. Okay, my limit order was triggered here, and then it was going down, but it was not going down as good as I wanted, because I saw on the H1 that the shape of the bars, this is not a shaved bar. I was expecting a shaved bar. This thing was happening very close to the 20 moving average, so I was expecting a shaved bar. I didn't see a shaved bar. Okay, so I decided to wait, take 20 on this market. 20. Okay, Okay, sorry, not this particular market. Yeah, but what I noticed is that I would have loved to see a bar that closed very close to the low, but after the H1, the 1 hour bar closed, it didn't look very good. So I knew it was coming back to take out the stops. Okay, so immediately I started trailing it, and then I was right. The thing came back and stopped me out on that trade, and then I re-entered with the overshoot. It's called an overshoot. Okay, the moment price touches 123. Now, what I want you to understand here is the bad gang and the good gang I was talking about a while ago. Okay, what you see here is this is a major trend. This is a trend. Once you have a falling top, this is a top. This is another top that came lower. Okay, this is a bottom coming lower. Because once you're seeing this, you know you have a downtrend. And now this is a pullback. What you have here is a pullback right here. Okay, so this is the strong gang. This is a weak gang. This is a strong gang. This is a weak gang. But now this weak gang is not entirely weak, because this weak gang is supported by the bigger trend, which is a downtrend. So these are the only times when I can trade at the upper channel line. Okay, so most times if I'm looking at the entire trend, as is the case with EU here, the major trend is going up. You look at the trend, you see that the market is the momentum. We have higher highs and higher lows. Look at it here. You see higher highs and higher lows. So if I connect a trend channel line, you will see that what we have is higher high, higher low from this area here. See the market making higher highs and higher lows. Okay, so yeah, so you see this is a trend channel line. Okay, this trend channel line. All right, so all these tools are there on your MT4. You can use them. Okay, I'll take away the ray on this. So you can use them. With time, you get used to how you can draw them correctly. Okay, so yeah, you can see this is a channel. Okay, so I can stretch it out. You see that the market is just following this channel. Okay, going up, down, up, down. So the people making money here are the buyers. And then this is what I always tell you. Those of you doing your CNS, we don't look at the moving average so much. What we just need to see is that the market is rising. As long as market is rising, making higher highs like this, we give it a +1 because it means that it's strong. Okay, so there's no wisdom in coming to try to sell here. Okay, you come here, you sell, you lose money. If you're looking to sell here, you're going to lose money because the power is coming from down to up. So those that were trying to sell, those that were trying to sell, they are constantly losing money. Okay, they're constantly losing money. Okay, the only time I thought about selling on this market was on the small time frame. Okay, because I was trying to catch the trend that was coming down. So, but ultimately my bias is a buy. Okay, but right now my bias for EU is to wait on the sideline because there's a lot of indecision in that market. Okay, the person raising his hand. All right, you can talk now.
Please, which tool? There's a tool that they use automatically to give a ratio of one to profit to loss 1 to 2.
No, it's not on MT4. That thing is on Trading View. It's on
Okay,
Trading.
trading view.
Yeah,
Okay,
it's on
thanks.
Trading View. It's not on MT4. Yeah, with time you'll be able to use that Trading View by yourself. Okay. Yeah, so these the guys, so what I was showing you there is that the one down is a trend line. Okay, so it's like a glass floor. Immediately it cracks, is gone. Got to be careful with it. Immediately it cracks, is gone. So we use it to know when the market wants to reverse. Is a very, very important tool for us. Okay, the trend line, when the market is a downtrend, the trend line is drawn across the tops like this. Okay, it's drawn across the tops. So you can see here that the market was respecting it. Immediately it cracked, it changed to an uptrend. At least it will stop going down for a while. Even if it doesn't change to an uptrend, it will stop going down for a while. So this like a fence, that is guiding the bear. So as they go, they get to the fence, there's nowhere to turn to, they turn again, they push you down. As they get to the fence, they keep pushing you down. So all these areas offer opportunities for trading. All these areas, once the market touches here. Now the moment this thing cracks, I mean, what were you doing when it cracked? If you are strong, you wouldn't let them crack your wall, right? So once the glass is cracked, it's gone. And that's what I was telling you about divergence. Okay, an indicator will tell you that this is about to reverse. Okay, but you can just see it by plotting the line, right? You put your line across it, you can see it. And then what we do, we always anticipate all these things. Once it touches one and touches twice, okay, we'll draw the line and extend it. Okay, waiting for it to touch it again. Once it touches it again, we're ready to sell. Okay, and that's the concept of overshoot. I like overshoots so much because it's very, very easy to trade, and is very reliable, and it gives you a reasonable risk to reward ratio. Okay, so if you see an overshoot like this, market respects one, respects twice. Yeah, it mustn't give you an overshoot, but when I see an overshoot, I wait for the inside bar. Okay, I wait for the inside bar. Let me change this thing to green and red so that you can see. Okay. Up screen, but down is red. Bull candle line, bear candle red. Okay. Okay, so yeah, so you see, once I see an overshoot, I want to see an inside bar. This is an inside bar. When you see an overshoot, the market doesn't just go down, it will give you an inside bar. You see that green bar coming up. Okay, so that's what I wait for. So once I see the green bar coming up and then I see it stall, immediately it stalls, I know that it's ready to move. Okay, so every time you see an overshoot, with the color, this is a green color. So since it's green, we wait for the inside bar. An inside bar is when you have red and green like this. That's an inside bar. Okay, it means that this one, the green is inside the red one. That's an inside bar. Okay, so once we see that, we trade, we know that the overshoot is going to work. Okay, so okay, yeah, the person say gets what overshoot is. Yeah, you get it now. That's fine. Yeah, go back, go and do your back test on this overshoot thing. Overshoot works a lot. Okay, see, when overshoots show up in a pullback, they will send the market down. Okay, I use overshoots to get in on the on the New York session. Okay, because most times an overshoot is the attempt of the big boys to take people's money. Okay, so I call it trap overshoot. So you get trapped. Okay, and then when I see people get trapped in an overshoot, I'm more than happy to take the market. Okay, because it's fairly reliable, and then I get a good risk to reward on it. So I like it. And then that tip is my tipping point. It's a tipping point. Once it's very easy for me to know that my trade is not going to work, because immediately the market comes and beats that tip, the high, I know that the trade has been rendered invalid. So I don't even I don't gamble it. I just get out immediately. It's so easy for me to say, yeah, this trade is invalid. Okay, so yeah, that's an overshoot. They're everywhere on the chart. I mean, we can stay here all evening and I'll show you 1,000 overshoots on any chart you bring. okay, because the market is always doing the same thing over and over and over and over again. Okay, so and then traders are taught to also do the same thing over and over and over again. Here is your overshoot, guys. So if you were on this market, this is a daily time frame. Once this thing shows up, okay, you see the poke through, you know, once the market pokes through, and then it comes down. If the overshoot is caused by a red bar for a sell, okay, you don't need to wait for an inside bar. This is an inside bar, but you don't need to wait for it. Why I waited for an inside bar here was because what poked through is a green for a sell. So when I see a red for a sell, with time you get to understand all those things. Okay, but that's not even the main thing we're talking about. I'm just teaching you this trend line thing. Trend line is more effective after two bounces. Okay, so if I have one bounce and another bounce, the third time, a lot of traders have laid ambush, and they are ready to push the market lower. So most times, after three bounces, the trend line becomes very weak, okay, and might not be able to sustain. You know, their power will get a little bit weak. So you can see what happened here. Okay, so the thing cracked. Yeah, if I open the weekly time frame on this same market here, you will see a very nice channel that started since early 2018 on this EU. Okay, the thing has been going for quite a while. Yeah, so 1 minute, please. Get out all those things on my charts. Just take them out. Okay. Yeah. So I want a clean chart. Yeah. So see the channel here. I can draw one like this. You see this this one now is the trend line. Okay. You see my overshoot, right? See the overshoot, and then you see this other one right here. Okay. So this is a channel. This one is called a falling channel. Okay, it's a falling channel when it's going down. And then when you have a falling channel like this, we call it a falling wedge. Sometimes if the top, the ending part is a bit narrow, okay, so we call it a wedge. And then the way this market always plays out is when you have a wedge like this, it breaks out to the upside if it's a falling wedge. If you have a rising wedge, something that looks like this, you have a rising wedge, something that looks like this, you know, market going up like this, you know, when it cracks, if you have something like this, when it cracks, it will come out to the downside. Okay, when it cracks, it comes out through the downside. So when you have something like this, when it cracks, it goes out through the upside. Okay, what I'm trying to say is, if for example there's a channel here, moment it cracks, what you observe is that the market will come out from, it will come out from this other side. And then if it's rising, if this is a rising wedge, okay, this is a rising wedge, then this is a falling wedge. Okay, so you see this one, the way it played out, it fell completely from this side. All right, and then this market's about to bottom out. So I am expecting one more push to the downside. A lot of people are not expecting it. Trump is about to get impeached. Okay, so I don't know if they're going to impeach the young man, but everything depends on his decision with the case with China. Okay, so I don't know what they're going to do, but the price tells me everything I need to know. So if there's an overshoot here, there's a high tendency of the market pushing this thing lower. Okay, from now till somewhere around January, February, and then throughout 2020, we expect the upside to begin. Okay, upside. That's the way this thing work out. You know, so we expect that upside next year. Okay, and it's going to go for a long time. You can imagine being on weekly time frames where the market is falling like this or rising like this, make a heap of money. Okay, so yeah, this is a channel, trend channel and trend channel line. Okay, so I love to trade them. I call them peep crack. Okay, because once they crack, they offer enormous opportunity to make a heap of money. All right, especially if they move with speed like this. I told you about this trend line. The trend line will show you how steep it is. You can see how steep this one is. The steeper it is, the more the money you can make from it. When it cracks, it falls very fast. Okay, and if you don't get in on it very fast, you're going to lose the money. So, but when you have the one that is not so steep like this, you when it cracks, it goes slowly. It's like a turtle that is racing against the hair. It doesn't move too fast. Okay, so but when you have something like this, yeah, when it cracks, it goes. Okay, yeah, so that's a trend line. That's a trend line. Okay, that's a trend line and trend channel line. Trend channel line is the one on top that makes it a channel. The trend line is the one below, not necessarily below. It depends. Now, in this case, this line, this one here is a trend line. This one is a trend line. This one here is a channel line. Is a trend channel line. Okay, you see. Then in this case here, the one here, this one here is a trend line because this is the direction of the market. So this is a trend line. The one here. Meanwhile, this one is the one that makes it a channel. The one above here makes it a channel. Okay, so you can trade each time the market bounces on this line. You can trade each time it bounces. You can trade. Okay, that's the way the thing is designed. All right. So these are some of I call them psychological levels because these are areas where traders around the world are waiting to act from. So these levels, once the market gets to this level and traders react from it, I'm more than happy to join them because they play out very well, and then we can make some money with them. Okay, so this class is about to end, so I will just take a few questions so that I don't rush the other parts I'm supposed to teach you. And then I want to also hear from you guys. I hope you have started taking trades. Okay, because I've given you a simple strategy that you can use to trade. What we're doing now is to broaden your mind so that you can look at the chart and see more things, than just the ordinary things. Okay, I will mute you so that you can talk, please. So anybody who wants to talk can talk now. Yeah, go ahead and talk.
Please, how can you identify a fake out?
How you can identify a fake out?
Yes.
When there is no follow-through bar. The follow-through bar is if the market wants to break out. Look at the breakout here. The moment the market tries to break out here, this is a first red. This is a follow-through. Follow-through is the next bar after the one that breaks out. So if this is a faker, it will return back into the channel. Okay, it will run back into the channel. But if there's a follow-through bar, you know that is a genuine breakout. But I don't like to trade the breakouts directly most times. Okay, except I have a steep trend like this one you're seeing here. I don't like to trade the breakout. I wait for it to bounce on the trend line. Once it kisses the trend line, I usually get in. Just like what we had on that other time frame. When it broke, came back, kisses it, you can see the kiss. It made it. I like to enter from here because of my
I have a question.
Okay, somebody's in a